Okay, hello everyone and welcome to TI and Apply's European Road Freight Rate Benchmark Q2 2021 webinar. Today we're going to be discussing rate development through the second quarter of this year and really examining the developments that we've seen in the market. Particularly we're going to be looking at some of the major trends and themes that we've seen over the course of the last quarter and looking ahead as well to how we think rates may develop over the next quarter as well. Obviously some of the most important issues that we've seen over the last quarter or so have been, as we've been coming out of lockdowns all across Europe, we're all moving through different stages of the easing of lockdown restrictions and vaccination programs coming into play. And obviously that's opening up our economies, and road freight demand is fluctuating quite a lot because of that. So we've seen some volatility, but really we're going to be drilling into that today to show you exactly what's happening with freight rate development, all across Europe. We'll also be examining the long-term effects that we've seen as Brexit comes through and the European market gets used to dealing with some of the challenges that we're seeing across the channel. So we'll be taking a closer look at some of those issues today as well. Now, I'm very pleased to be joined today to discuss some of these issues by our quantitative analyst, Andy Rules. Andy works very hard on much of the analysis that underpins this particular report and so on, and he'll be able to answer some of your questions at the end. I'll shortly introduce you to the team from Upply as well, but of course, just bear in mind that this webinar will last about 30 minutes or so, and then we'll move on to a sort of 10-minute Q&A session as well at the end. So please do feel free to ask any questions that you may have during the webinar on the Q&A tool, which you'll be able to use via the Zoom platform. We'll do our best to answer any of the more straightforward questions around methodology as we go through the webinar by text, but we'll have a whole session at the end to go through a proper Q&A as well. Also, of course, we'll be releasing a recording of this webinar and also the white paper that goes with it at the end of the session. So you'll be able to read in much more detail about many of the points that we bring up today. Okay, so next I'd like to introduce you to Boris Pernay, who is the Chief Executive Officer of Upply, and it's the first time Boris is joining us on this particular webinar. So we're very pleased to welcome Boris as a speaker today. Boris has a lot of experience working in the road freight markets, also working with Geodis, working on supply chain optimization there. And his mantra at Upply has always been to provide transparency, which is exactly what we're doing today with this webinar. So Boris, we're very pleased to have you speaking today. Welcome.
Yeah, thank you. Thank you for having me. I'm very pleased to be part of the panel today. I'll try to do my best to give you the best insight I have.
Thank you, Boris. And we're also joined by Thomas Leroux, who is the Chief Data Officer at Upply and is responsible for collating and developing the data that we'll be examining today when we're looking at road freight trends. So welcome, Thomas, and it would be great if you could give a little introduction of yourself and obviously the data and what Upply brings through this road freight benchmarking service.
Yeah, hi Michael, hello everybody. It's a pleasure for me, of course, to be here on this webinar, past the previous one. So Upply in the summer, because I see that many people were here also in the past webinar, and it's very good and very nice to see all of you. Upply provides digital services for the supply chain industry, and one of our services is to give our users access to market data and analytics, mainly for road transportation, but also for air and sea transportation in the world. And so this is exactly what we have been doing here in partnership with Transport Intelligence, is to gather data from the market, to gather this data that are transactional data. So we get data from shippers, from freight forwarders, from carriers. We have a bit more than 4,000 companies that are registered to Upply. And with this data, we are trying to analyze it with the Transport Intelligence, and we have built these reports.
Yes, thank you, Thomas. So we're very excited to take you through some of those trends that we see today. And obviously, we cover the whole European market, but we'll also be looking at, the main trends on 36 international lanes today as well. But before we drill into that, it would be interesting, I think, just to have Andy just offer his view and comments on the overall European picture, which we can see in this quarterly trend chart here, looking at average European prices.
Sure, yeah, and rates remain really firm. It's a small change from the last quarter, but as you can see, we're in a really different situation to where we were a year ago. We're at 3.2% for the benchmark rate from Q2 of 2020. That's when the pandemic's effects on the economy were first really starting to be felt. So in the last quarter, the reopening of economies across Europe is really contributing to the rise in rates, aided by the vaccination drives. We're also seeing strong levels of private consumption continue. Due to the initial lockdowns, there was a sharp rise in household savings, but that's being unwound now, and there's a lot of private consumption expenditure, and that's really driving demand for road freight. So demand is really returning well. The other point I'd really highlight, supply chain disruption is really playing a part, whether that's in driver shortages, disruption at ports, shortage of transport equipment, even the shortage of some intermediate goods as well. So that's also a real driving factor for rates in this quarter.
Yes, thank you, Andy. Yeah, and I have to say we've seen similar trends influencing the overall market growth in some of our other sort of market studies and market sizing there. But it's interesting to see, and good really to see that demand recovering and returning, and obviously one consequence of that, I suppose, is the price bump that we're seeing here. So it tells you a bit about the overall European story. It's also, of course, very interesting to look to the more granular data and see how prices are changing all across Europe. So as usual, we have this nice little graphic here which shows you average prices between these countries around Europe to give you an idea of the sort of pricing mix that we see here. And actually one thing with the Upply and the data collection is that always adding more and more data and more coverage to the tool. Each quarter we have an even bigger data set to work from, which is absolutely fantastic. Thomas, would you like just to talk a little bit about some of the new data that's been added this quarter?
Yes, of course. So, I mean, this is the one of the best view that we have at Upply. This is the global view of the main indexes that we are working on. So these indexes are dedicated to the webinar and to the reports that we are publishing with Transport Intelligence, but we are also working within Upply on specific hub-to-hub indexes and country-to-country. And of course, our target, our roadmap is to get more and more data. Today, we have a lot of data on Western countries, and we are having new partnerships and new users on Central Europe and on the eastern part of Europe.
Mm-hmm. Yes, thank you, Thomas. It's always very interesting and good to hear that the data is getting richer and richer every quarter as things expand, and we're able to provide rates on other markets too. So of course we focus on the really strong markets here in this session, but the data is always growing. So we will go on and examine, I think, each of those lanes in a bit more detail as we go through, and we'll talk a bit about some of the trends we've already mentioned. But it's also, just before we get into that, I think interesting to have a look at sort of what we call the market efficiency of the overall European road freight market, and the differences between the front haul and the back haul rates. And we developed this chart here, which looks at basically the rate per kilometer, so we can have a bit of a way of measuring that sort of efficiency, really. Andy, could you take us through this?
Yeah, absolutely. So it really does kind of provide two purposes, really. Obviously, to provide that market efficiency measure. I suppose in a perfect market, you'd like to see front haul and back haul rates at similar levels if demand levels were matched up equally. But also this provides us with that Euro per kilometer data, which I suppose is quite relatable for users in the market. We're at 160 per kilometer, which is kind of at a psychological barrier, I suppose, that we've reached. So it's a really high point. We've only seen that a handful of times in recent years. And what we're seeing in this quarter is the difference between the front haul and the back haul rates close. Brexit has played a part in that somewhat, and we'll kind of go on to discuss that later. But also, I think the range here is 34 cents per kilometer, which is lower than it has been in previous years. A little bit, I think it shows a bit of the situation in road freight normalizing a little, certainly compared to last year as well, where demand levels were very lumpy. So that volatility is subsiding somewhat as we recover from the pandemic.
Yeah, no, it's good to see. Okay, well, now that we're seeing that, as Andy says, volatility stabilizing, it's probably good to see how things are looking on an individual lane basis. And every quarter when we're looking at road freight rates, we tend to focus on the highest volume lanes first of all. And here we're looking at 3 of the largest lanes in Europe here. And obviously you can see a bit of that price volatility that we've mentioned in previous quarters as prices fluctuate across these lanes. There's particularly, we've seen some crossing of rates over the last couple of years here for both the Duisburg-Lille, or the Germany-France lane, and the France-Spain lane as well. Boris, could you take us through what's behind the pricing changes on those lanes, please?
Yes, sure. Well, let me start by Paris to Madrid and Madrid to Paris. So, which is somehow following the trend that we described earlier on the overall European market. So on the road, Paris to Madrid, rate increased by 2.8% year on year and 1.1% quarter on quarter. And if I look at the other way around, Madrid to Paris, the increase was 2.2%, a little bit lower, but 1.1 quarter on quarter, which is equal. All of this is done, it's led by the asymmetrical dynamics that we see on various industry and on various markets as well. So let me dive into a little bit more details. First of all, the recovery in manufacturing, and in particular in automotive volumes, is a key driver on this lane. You know that there are plants in Madrid and close to Barcelona as well in Spain, and France, you know them in the north of France or Paris area. Production levels in both countries were somehow decimated by the pandemics last year, leading to a significant drop in the freight volumes. However, in Spain, monthly automotive exports have surpassed the pre-pandemic level, which means that it put a lot of tension on the demand. And as this crisis was a crisis on both sides, on offer and demand, you can easily understand that it creates it's the resulting of this pressure is this increase of rates. Meanwhile, you also have the agricultural trade, which is also significant on this road. Vegetable and fruits coming from Spain to France are putting as well a significant amount of volumes on the road. And this is not, let's say, spectacular volumes, but they are solid anyway. And as the offer has been impacted by the pandemic, again, it's a very simple mechanism. You put more demand, you have less offer, therefore the price increased. So it's kind of easy. And you know that on this lane, around 80% of the freight is carried by Spanish companies. So it explains a little bit the dynamics behind that. And so that's interesting to look at them. Now, if I move on those Duisburg to Lille, which is supposedly representing France to Germany, German import rates from Lille to Duisburg fell 0.1%, so almost, I would say, nothing. But Duisburg-Lille, on the other hand, is a crucial lane for the manufacturing sectors. Why is that? Because most of the French, let's say, manufacturers are using products coming from this area in Germany. So if I combine this with the shortage of semiconductors, for example, which put a lot of pressure on the German production and consequently on the French, let's say, demands, you have these dynamics which are really impacting the freight rates. What else I can say, because it's very similar to all the other explanation I already gave. So it appears. Sorry, Michael. It appears like repeating what was said before by Andy or Michael, but it's really, I would say, overall the asymmetrical dynamics that we see on various countries and regions, which are putting pressure on the rates.
Yeah, that's always, when it comes down to it, that's why it's so important to look at the individual lanes, because it always comes down to those sort of demand dynamics and what's driving those in terms of volumes and from different sectors and so on, and obviously there's plan to meet them. So yeah, it's always fascinating to hear what's really driving those trends. Andy, could you tell us a little bit about Poland, Germany?
Yeah, sure. And I think probably important to give the context for this lane as well. The rates are up. Warsaw to Duisburg up 0.5%, and the other direction is up 1.7%. So no, okay increase, but not too sizable. And really, what happened last year was obviously when the pandemic struck, there was a lot of border congestion on this lane. So and the supply was interrupted as well. So the rates were structurally quite high then anyway, so the year on year is not a really strong increase. I think particularly point out for the Polish import demand there. We've seen an extended lockdown in Poland, which seems to have kept a bit of a lid on growth rates, but so they're up but not by too much here.
Okay, thank you, Andy. Yes, it's very much one affected by lockdowns, and of course that's something we've seen really across the board. So the next topic we're going to move to is to look really at the impact of Brexit primarily on the UK lane, but of course we've had a bit of a perfect storm really of Brexit and pandemic restrictions, both imposing their own types of disruptions on the cross-channel lanes, and we can see here basically UK imports and UK exports prices, and an index really shows the steepness of the inclines that we've seen over the last couple of quarters. Andy, could you take us through that?
Sure. So I mean, overall, the red line here, the indexed rates are up 7.2% for in year-over-year terms, but outbound rates really, you can see there's a really strong difference between the outbound rates and the inbound rates there. So why is that? Well, we think part of this is because of the checks that have been implemented on UK goods entering the EU. The full checks have been in place for goods in that direction since the 1st of January, but the UK has continued delayed the implementation of full checks. So we now have to wait until 2022 until those are all in place. So it looks like hauliers are attributing or putting a rate rise where the administrative burdens are most intense. But also, I mean, UK outbound rates are actually structurally they're much lower due to the trade imbalance between the UK and Europe. I think inbound rates are closer to about 195 per kilometre, which is much higher than our average head haul rate of 177. So you can see there's the room for that price increase on the UK outbound rates there. So that seems to be where it's being pushed up. It's also really important, as you said, Michael, that there's lots of other kind of structural issues affecting this lane. The capacity shortage in the UK is becoming particularly acute. There's new immigration rules as a result of Brexit, meaning that UK carriers are now struggling to employ EU drivers. As a result of the pandemic, 15,000 EU HGV drivers left the UK between March and June of last year, leaving a total of 25,000. Now that only recovered to 28,000 by the end of the year. So you can see this shortage, which really has compounded a strong longer term issue in terms of driver shortages in the UK as well. So all of these are kind of creating a perfect storm and leading to certainly a very sharp increase in UK outbound rates.
Okay. And the next chart really, I think this just provides a bit more colour, particularly when we're thinking about the changes that we've seen over the last sort of 2-3 quarters or so, to look at some of the monthly data as well. And obviously, very sharp bump at the end of last year. So what's your view, Andy, on the situation now and apparent relative stabilisation of higher rates?
Yeah, well, this is it. It looks like rates are starting to fall. It looks like there is a clear kind of direction of travel there. But I suppose remember when the UK implements full checks from 2022, perhaps we'll see the bounce in UK inbound rates there as well. But the direction, certainly in the short term, seems to be down.
Yes, Boris, would you like to offer a sort of continental viewpoint on the Brexit and the UK rates that we're seeing?
Yeah, I mean, that's special to talk after Andy, which is the real expert of this. But I would say honestly, that's there's no way we can go back to the level of October 2020 soon. So that's something that appears to be very, let's say, simple to say. Now, I believe that, let's say, weeks after weeks, I mean, the situation will cool down a little bit, pressure will decrease. But that being said, I don't see us going below the level of January 2021. And so to me, it's here to stay. And we will recover, let's say, step by step. It's not going to happen in 1 month or 2 months or even a quarter, to my point of view.
Yes, I think that's something that most would agree with, really, price. But we'll keep monitoring that, and we'll see how fast it drops or doesn't. And that's the beauty of having all this data and visibility on the market, I suppose, to see what's really taking place. Okay. Now, obviously, Brexit is something that we've been watching quite closely over the last 6 months or so. I think in the Q4 2020 report, we set out a number of trends that we thought would shape the sort of market and development of pricing in 2021. So we'll come on to talk about some of those others as well as a few which we think will be very important through the second half of this year as well. But first of all, before we move on to some of those, it's, I think, interesting to look at the chart, really just to map pricing development over the last few years here, just so we can see the trend there when we're considering these trends. Is there anything you'd like to point out about this chart, Andy?
Yeah, I mean, I guess I'd just point to, our prediction that Q4 was for a rate increase. I mean, that was a pretty easy prediction to make, I'd say, given the demand situation in 2020. Obviously, that's playing out so far. 2020 was the first rate drop we've seen. But yeah, the rates have been quite strong into the first half of the year. I'd probably expect further increases in future.
Okay, well, let's dive into some of the trends that we are looking at here. So the top 6 really are trends that we spoke about at the start of the year about setting expectations, and then the 2 below are things that have become more important as the year goes through. So we'll take a few of these each in turn. Obviously, any analysis of pretty much anything in the European economy in 2021 has to account for the impact of COVID and the recovery from COVID-19. Across Europe through the first and second quarters, we saw a huge number of new restrictions brought in to try and control the spread of coronavirus. And clearly that had a very substantial effect that we're all familiar with, I'm sure, on demand, particularly from physical retail on high streets in stores, and also on hospitality and the logistics that's required for that. So demand for drinks logistics and food for restaurants obviously collapsed as well. And it's created an environment where obviously we're now coming out of that and that demand is recovering, but it's been very volatile. And volatility in terms of demand on different lanes has been a major factor through this first half of the year, as we all expected. Now, we do expect the demand to be a bit more stable, I suppose, in the second half of the year, as we're hoping to have fewer restrictions in place. But there's not to say there may not be other restrictions that are necessary as we go into next winter. And that kind of demand volatility is likely to remain, especially as obviously consumers may be getting back to a bit more normality, but it's very uncertain economic times we're in still. So consumer spending is not necessarily as predictable as it might otherwise have been. And I think that takes us quite naturally on to the sectoral changes section here. Obviously, we're looking, or we have experienced an awful lot of disruption across different sectors. Particularly hard hit, of course, with automotive demand. And Boris has already mentioned a little bit about how some of that's recovering now, and that's obviously providing a bit of a volume increase now relative to where we were last year, with automotive volumes having dropped off so much. Of course, we've also seen lots of sort of volatility and demand in high tech as well, and I think Boris is going to talk a bit later about some of the supply issues we've had, particularly with chip shortages and so on, disrupting demand there. So there's been a lot of disruption to various different sectors, and obviously that contributes even further to make some more sort of lumpy and volatile demand environment as well. Third topic I've just mentioned before I pass on to Andy here would be on Brexit. Now, obviously, we've just discussed that at some length, but I think we are reaching a point of more stability and certainty now about the impact of Brexit on cross-channel freight, but we still haven't really moved to the full arrangements, for actually dealing with Brexit as it will be in the long term. we're still in a bit of a grace period, and we're not quite sure how that's going to develop over the next year or so. So we do expect that to continue to affect prices on the cross-channel lanes, and probably to keep prices increasing. Andy, would you like to speak on the other three?
Yeah, sure. So we highlighted diesel prices, again, a relatively straightforward prediction on the increase there. Oil prices really fell off quite a lot last year as a result of lower demand from the economies stalling, weaker sea freight demand. So, I mean, as a result of kind of the economy bouncing back, we're seeing diesel prices increase as well. They're now 3.2% higher year over year over the first half of the year. Across Europe, they're actually 8.2% higher than seen over the whole of 2020. So we've certainly seen a rise there. That's a key cost component in road freight, and certainly plays a part in road freight rates there. Apart from that, we also highlighted the mobility package, which appears to be leading to higher costs, particularly for Eastern European transport companies. We've seen many carriers looking to consider how their networks are structured. So a poll from the UK's Road Haulage Association found that 36% of participants were looking to establish new bases with a view to drivers completing shorter legs of international journeys. So you can see it's really kind of flipping many operational networks on its head, and really changing the way road freight is carried out for a number of companies. And finally, as well, driver shortages. Kind of mentioned this in the Brexit section already, but across Europe, the IRU is expecting unfilled driver positions to rise from 7% to 17% in 2021. It's particularly acute in the UK, as I said, but there's other places where more has been done to try and encourage drivers into the market. There's been some deregulation in Spain, leading to more hauliers entering the market. But overall, I mean, structurally, the picture remains difficult. It's very difficult to attract drivers into the market. It's not seen as a particularly attractive profession, and that's going to continue to be a real. It could create even more difficulties in the months ahead as well, leading to higher, pushing up freight rates.
Yes, the definite supply side issue there, and one that it seems increasingly difficult to resolve. I think an overwhelming theme of what we've seen over the last year, of course, is supply chain disruption, and unfortunately, it's not really ending just yet. So we see, the last quarter, some real issues in ports, moving from ports all around the world, but even in European ports as well here too. Boris, would you like to speak about port disruption and some of the supply shortages that we've seen?
Yes, please. Yeah, sure. I mean, I'll start by the supply shortages, because everything you read is about supply shortages, right? So I can just list few of them, which are gonna appear very obvious for you, but anyway, it's good to mention them anyway. So first of all, I mean, you have this shortage on containers, right? In fact, it's a combination of shortages and as well containers that are not at the place that they should be, right? So which is the result of these peaks and valleys on the demand and offer that are pumping everywhere. When a country is starting to rebound, another one is starting to lock down. So, and it's create asymmetrical dynamics everywhere, which put a lot of pressure on our industry. So containers is one of them. Pallets, as a result as well, are not at the location they should be, and the lack. There is a real shortage on pallets as well. But I can also add to that drivers. I mean, shortages on drivers are real everywhere. The capacities overall are on shortage, because the pandemic destroyed a lot of capacities on the offer side. And you can add many others as well. Like, let me just highlight one other example. Payment terms. Most of the payment terms are putting a lot of pressure on the treasury of the offer side, because most of them are not paid on due time, and that's creating a big challenge for them. Now, if I move on the result of all those shortages on port disruptions, combined with other dynamic that I'm gonna explain in a minute. And you'll see in a later stage that we're going to have a look on Duisburg to Rotterdam, which is really highlighting the result of all what I'm going to explain. So let me just remind you all the export of containers in TEU for the first trimester 2021 is increased by 8.1%. That's significant compared to the same period last year. So 8%, it's not peanuts, it's a lot. And then you combine that with other dynamics like we are handling more empty containers. That could be seen as stupid, but that's relocation of containers, which is creating a lot of disruption as well. The second cause that I see as well is there is a trend. The average weight per container is decreasing quarter on quarter, which means that we put less freight on a container somehow, which create as well pressure. So all of this result as a kind of saturation of port terminals. Containers are immobilized, they need to be moved, and this generates significant costs for shippers, right? And this somehow the shippers prefer to trade off between, okay, I'm going to pay a higher price on the road freight so that I'm not going to pay the demurrage and all the cost associated. And we need to accelerate the rotation between ports and destination of goods and back and forth. And we see that in a minute in this lane of Duisburg to Rotterdam. But that's mainly what I wanted to highlight here. And yeah, sorry, thank you, Michael. And here you see the effect of this. And this is really because shippers prefer, let's say, arbitrating. Okay, I'm going to pay a higher cost for road, but I'm not going to support all the charges and surrester risk that's going to be given to me. So you see that all these shortages can be translated into a high increase on those lanes. And there are many other lanes related to port congestion, which are really booming like this.
Yes, thank you, Boris. It's very interesting to see the effect it really has. We can obviously see it can be quite disruptive and have quite a marked impact on rate development.
And Michael, if I may add one point as well, which I think gonna drive significant changes in the months to come. If you take 5 minutes to think about the increase of rates that we've seen on every lanes, so road, but also we can speak about ocean freight rates, which have just been multiplied by 10 or 12 on some lanes, for a quality of services which have never been that bad. Last number I saw was 35% of the container are arriving in time in full. So if you think about that when you are managing a supply chain, wow, that's just crazy. You pay 10 times the price and you have a quality of service which is just bad.
Yes, it's astonishing, really. I mean, it's nice in some ways. The price change we see in road freight don't come obviously close to that, and it's amazing the strength of the position in the market whereby you can treat your customers so, in many cases quite poorly like that. So it's been an interesting period there, and our graphs are off the scale for sea freight rates at the moment as well. So, very interesting to compare those. So that's hopefully gives you a bit of an idea about one of the biggest price changes we see this time around. The last actually data side here is on the lane that we see significant change or expect to continue change on over the next quarter. Andy, could you take us through this one?
Sure. So I mean, over the longer term, this is it's been rate declines for some time now. I mean, it relates in some ways to the strength or the weakness, I suppose, of the Italian economy over the last few years. But also, what I want to really highlight here as we look ahead is due to the supply constraints. What possible supply constraints will happen on this lane? So, according to Eurostat data, Polish hauliers account for over 50% of freight ton kilometers carried on this lane. So, as we look forward and see how the mobility package kind of plays out, we've already had some changes kind of implemented already there, but more will obviously follow in 2022. How is this going to restrict the supply of foreign carriers on this lane? It's not obviously a direct link to Poland, so trying to work out how this is actually going to be affected by the mobility package is something we'll be certainly looking out for in the months to come.
Okay, thank you very much, Andy. So that concludes the last of the sort of data slides. I think Thomas is going to deal with some of these methodological points as we go through some of the questions. We've already got quite a few here, and a few of them are on data and methodology. So we'll move straight through to the Q&A session here. So if you haven't asked a question already, please do feel free to jump in. We'll do our best to get through as many questions as we possibly can during these sessions, and I'll direct the ones on data and methodology to apply, and then the more trend-based ones we'll try and handle here at Transport and Intelligence. So I think if we start, perhaps we can open up with a fairly question on some actually our question on some domestic data here, looking at France to UK. Oh no, it's international actually. France to UK tracking rates. Multiplying by 2 and 3 times in June and July, which apparently sounds crazy according to the person asking the question with the disruption. Do we have any information on this? Well, Thomas, obviously we've got the data that we've used in the report. Would you like to talk a bit about some of the other data that's available on that lane?
Yeah, thank you. I will try to answer, several questions, because to be honest, we received a lot of questions, so it's very good. Regarding the data, so we are gathering data from many sources, from shippers, carriers, and freight forwarders. I say that at the beginning, a bit more than 4,000 companies are registered to our website, and this is the last count that I had was a bit more than 350 million of data that we collected in the several modes of transportation. So it's quite big data. And to answer one regarding domestic or in France, we are a French-based company, yes, indeed, but we gather data from many other countries and companies in other countries. So, of course, data that we have in France and in Benelux, Germany, Spain, or Italy, it's very good, but we have also quite good data. And Boris said that at the beginning, transparency is key at Upply. So if you go to our website, or even if you want to have a talk, a chat, we have information regarding the quality of the data from a hub to hub. We have a heat map of the quality of data across Europe. So please feel free to come to the website or ask us this kind of questions. Unfortunately, and this is to answer to Marco, we don't have data regarding trucking situation between Western Europe and Morocco.
Yes, thank you, Thomas. There, we have another question here, which is looking at driver shortages, saying Europe did see driver shortages in the past. How is it different this time in terms of how it will impact prices both in the UK and the EU? And how do you see it stabilizing? Andy, would you comment on that?
Well, I think the issues really are, and perhaps they're here to stay. The average age of driver continues to increase. There's not a lot. Well, there's programs being used to incentivize take up of these positions, but it seems particularly acute. I mean, obviously we've got a UK angle here where we're seeing some supermarkets struggling to restock due to some supply shortages of drivers. So I think the fact that obviously the age of drivers average age of drivers is still very high. There's probably not enough being done to attract younger drivers into the profession. Not enough being done to improve the facilities, parking lots, and in terms of accommodation and everything. So I don't see it kind of going away in the short term. I think it's here to stay, and might need some government intervention to actually solve these issues.
Yes, thank you, Andy. There's also another question here, actually, which is looking at basically looking at prices for Q3 and expectations. Andy, would you like to have a go on that one as well?
Yeah, so I mean, we're still seeing the economies are going to open up around Europe. I mean, for parts of this forecast of Q2, certainly, we were still lots of lockdowns going on. I mean, the situation is obviously varied across the continent. But I mean, the UK has obviously kind of come out of its the vast majority of restrictions. The vast majority of restrictions have been lifted now, and as that happens around Europe, I think we're going to see much stronger demand coming back as well. So I'd expect that demand increase to lead to continually growing rates over the summer.
Okay, thank you very much, Andy. There's another fairly straightforward data question here, Thomas, which is just asking about whether this is the data based on PAX goods or also dry and liquid bulk movements. Would you like to quickly answer that one?
Yeah, exactly. So all the data that you have seen on this report, this is for full truck loads. So we are talking about trucks about the 20 or a bit more than 20 tons for general cargo only. So FTL, general cargo. We have other data regarding liquids, rolling materials, or reefers, or stuff like that. This is available on the website, but here the focus is FTL, general cargo.
Okay, thank you, Thomas. Another question here, maybe more on the trend side. We don't have road freight rate data going back this far, but we can talk certainly about the impact on the market. So we've got this question here, which is in terms of comparing 2020 to the global financial crisis in 08-09, what are the main differences that you see, I guess, with the view to road freight, Andy?
Sure. So I suppose probably the thing I'd highlight is private consumption and how well that's rebounded. Obviously, during the 08-09 crisis, consumer confidence was very low. It took a long time to recover. But at the start of the pandemic, there were a lot of enforced savings, people being stuck at home. And yeah, there was a sharp increase in household savings. So a lot of the rebound in activity has coincided with the rebound in people going out and spending money. And that's led to a strong increase in road freight activity. We've also seen a lot of increases in the B2C side of the market, and that's also leading to further congestion in the market. So yeah, big differences from 08-09 to 2020.
Okay, thank you very much, Andy. Yes, there's another question here which just asks for a bit of clarification. As far as I understand, Brexit is having a major impact on rates increases for export from the UK, whereas imports are not as heavily impacted. Is that correct?
Yeah, so I mean, the data we have here, that's what it's showing. As I said, we seem to think that's due to the lower prices already charged. It's the kind of the easier way of increasing the rates on that lane. And as I said as well, it's also where the administrative burdens are taking place of where there are full checks being implemented as well. So it seems like hauliers are pricing that into that lanes, those UK outbound lanes specifically.
Yeah, that's right. Okay, well, we've had another question here as well, looking at euro price per kilometer. So obviously earlier in the presentation, we did show you some euro price per kilometers, and we can provide that data through these benchmark reports, and have focused a little bit on that in the past with previous reports as well. So it can always be calculated from the data that's given there in terms of distance between city pairs and so on, the rate per kilometer. Is that something you provide, Thomas, through the platform as well?
Yes, also no, yes and no, not yet. To be specific, we will add it by the end of the year. Today you have only the full price, the full price without the per kilometer, but this will be available by the end of the year. Yeah.
Okay. And as I say, we have covered that in some of the previous reports, and a little bit on in terms of average on this particular presentation as well. Thomas, would you also like to answer the question then on the on basically how are carriers doing rate adjustment for the fixed tariffs? Is it a good time to have a fixed tariff RFQ? In short, what should be the negotiation strategy with carriers for a shipper?
Yeah, so this is a good point, and I saw also another question from someone talking about the auction for spot freight prices. I mean, to answer it globally, the pricing today and with volatility, the pricing is the key. And the key question is how, from a carrier perspective, how can I price dynamically? And from a shipper one, do I need to secure the prices for a 2 or 3 years contract, or do I get to buy on the spot that may be more cheaper? I don't have the answer. What I know is that we have clients today that went on the market and asked for 2 years contract, and the contract's prices were up by 10%. But it's quite simple to understand. Carriers on their side don't know. They don't know if the volatility will keep going up or down, or if we will have volatility. So they protect themselves, and they think about the worst case scenario, and they put high prices. this is the situation that we are today. I don't have the crystal balls to know exactly what will be the next months regarding the rates, but we know that many carriers and much carriers are working on dynamic tools regarding prices to try to adjust to this volatility of prices.
Brilliant, thank you very much, Thomas. There, we've also had a couple of questions just about the mobility package and the impact on rates, which I know Andy's already mentioned a little bit. But is there anything you'd like to add on that, Andy?
Yeah, I mean, I suppose we've only seen parts of the changes being implemented so far, specifically on the return of drivers. They're basically every three to 4 weeks. Obviously, there'll be more changes coming on in February, obviously around cabotage as well. So, I mean, certainly a lot of Eastern European transport companies seem to be quite concerned about this. Obviously, and also the member states as well have been looking to try and make a lot of changes here. So, I think there is quite a key concern about it disrupting the kind of the economic viability for some carriers on some lanes. So, perhaps some of those lower kind of cost options are going to be more difficult to run in future in the years ahead. So I think that's going to increase rates for in the years ahead.
Yeah, it's always a difficult question to really see, but of course we have already seen some of the changes coming in and making impacts around holidays able to operate in different countries and so on as well. So yeah, it's been very interesting there. Might make this the last question then. We've got one here which is asking about autonomous trucks and their impact on road freight rates in the medium/long term in our opinions. Do we think it'll be a value or not, or do we think it'll have much impact or not? Well, obviously at this stage, with nothing really to speak of in terms of autonomous vehicles, it's very difficult to see what sort of short or medium term impact it may have. But obviously we would expect that if autonomous vehicles do become a feature of our roads and the road freight industry, that should make a huge structural change to the industry, bring obviously labour costs pretty much out of the driver situation, and also obviously change driving times and distances and all kinds of aspects. When you take humans out of the cab, it makes a big difference. So I guess we'd expect that in the long run to change pricing, to bring prices down. Andy, any thoughts on that?
Yeah, I suppose, I mean, there's obviously various levels of autonomous driving as well. I mean, if we talk about something like platooning, you've still got a cost element there for all the drivers who, even if you've got, say, three trucks in unison travelling, all three are being paid. So there are obviously a savings perhaps in terms of fuel efficiency and such, but those are the minimal ones. I mean, it's more that perhaps longer term, when if we get to a stage where we have full autonomous vehicles, that's really when it's going to happen. But that seems like a much longer term thing. There might be some more shorter term changes which are autonomous vehicles, but perhaps not making quite the impact on road freight rates.
Yes, yeah, absolutely. Okay, well, thank you very much, everyone, for attending, and also to our panelists, Andy, to Thomas, and to Boris, for offering your expertise and views on the market. We've answered as many questions as we can. If you do have any further questions, then you can, of course, get in touch with us here at TI or Upply. Please do get in touch with Upply if you've got direct questions about the road freight rate development and benchmarking capabilities. An amazing platform there which can really provide so much visibility on these kind of pricing issues. And of course, if you want to talk about any of these trends and developments on the road freight market more widely, then we'll be very happy to hear from you at Transport Intelligence, where we can offer you very detailed and comprehensive view of the future of the market and the market's development there as well. So again, thank you very much for joining us today, and thank you to the panelists, and we'll hope to see you in the next webinar in a quarter's time.